Hello, Sean Ings here, and welcome to another edition of the MicroCap Club Member Spotlight. In these interviews, we'll showcase many of the members of MicroCap Club. Today, we have Tim Eriksen, founder and president of Eriksen Capital Management. Tim, thanks for joining.
Oh, my pleasure.
So tell us a little bit about your background and how you got to where you are today.
And I always wanted to go into the money management business. Even during my undergrad days, I graduated and then waited a couple of years, worked for Franklin Templeton Funds, but I was working in their shareholder services, wasn't really doing anything investment side that I wanted to do. Went and got my MBA at Texas A&M. And I didn't want to go to New York or Chicago, so it was kind of hard to break into the industry. So I sidetracked construction for a number of years and worked for Peter Sons before just kind of quitting and started working for Walker's Manual, which puts out manuals on unlisted stocks, community banks, and things like that. So I worked for them for a year as like an independent contractor and writing a newsletter, and just, man, I loved it. And then he kind of the guy wanted to start a hedge fund. And I'm like, I kind of want to start a hedge fund. So I went that route. I started with a $150,000 hedge fund, which is really the smallest I've ever heard of.
Right.
And that was 17 years ago, but just building up the business and just, living in the microcap space has been a blast.
So you mentioned that you worked with Peter Kiewit and Sons. That Ian and I did a case study on that business in our Intelligent Fanatics books. And I just found that to be a wonderful business, and just the story about Peter Kiewit was amazing. I'm just curious if you have any thoughts about the business, the culture, and any of that kind of stuff.
I don't even know where to start. I mean, as a culture, there's things that I probably didn't like. They're very workaholic and would work 6 days a week, and I wanted a little more work-life balance than what they had at the time. But just the discipline, the methodologies, do it right the first time, plan your work the plan. They would have these sayings, but that are really very helpful. But what their expertise was really knowing what they're doing beforehand and not trying to figure it out later. So just tons of data that they would have, before they bid a project. They would just keep data on everything they've ever done so they could find out what really is similar here. That way they weren't using like a bad analogy or a false analogy. And it just served them so well, because then I was, at the same time I was working there, I got to study their financials. I would, just dig in my spare time and went back, 30 years and looking at stuff and would find things internally. And you're just like, how in the world do these guys compound in the high 20% range for 30, 40 years? Was just amazing.
Wow. Yeah, that's crazy. Yeah, because I haven't been able to look at any of the financials because they're private business. But yeah, that's really interesting to be able to see that and see how that business has grown all over the years, because it's these special companies. 15, 20% is not unheard of. And like you said, for decades and decades and decades. And that's just crazy. The amount, Buffett's made the comment before that he has the second best performance in the building when he used to have his own Peter Kiewit building. The Kiewit's since moved out of that building in the last couple of years, but it's very telling in terms of their performance. And they actually had to file publicly for a long time. There's a lot of public filings for them and their spinoffs because of the number of shareholders they had. So up through maybe 2005 or so, they filed. Right. Well, cool. And so you mentioned that you really got introduced in the MicroCap world when you were doing that report. Was there anything that you learned while you were doing that and kind of helped shape who you are today?
Obviously that business and those manuals that just cover these tiny or illiquid stocks. But then you could go back to, I think maybe I was working there 2004, but they had manuals starting in 1996. But to just kind of go back through them and study them and to learn which ones were like perpetually undervalued and which ones were only temporary and could remedy that, which ones had maybe a catalyst to get out of it. It's not like you could just screen and figure that out. It's an art as well, but looking for clues from management, looking in the financials is something going to change? Because then your returns can go, really good. It's great to buy something at 5 or 6 times earnings, and you'll do well. as long as earnings are still there. But boy, anytime that gets unlocked and goes to 10 or 15, you get 2 or 3x, really fast.
Right. And so can you tell us a little bit about your evolution as an investor, from the early times to, how you are today?
Like most people, you have a little bit of evolution. I don't have a drastic evolution. I kind of understood quickly the pitfalls that Buffett would describe or other people would describe of value traps, or not just being book value focused. And I know that's hard. I know so many good friends and microcap investors that are so book value focused, but for me, it wasn't the way I wanted to think about it. I'm buying cash flows. I'm buying, not replacement cost, but cash flows. It's like, I don't want to own a bank at half of book value that earns 5% return on equity. That's not a good bank. I'd rather pay 1.5 times book for something that earns 25% return on equity. So learning that, and then, still trying to avoid that impulse to always go, well, hey, here's $1 for 50 cents. And it's like, yeah, that'll be 52 cents next year and 55 after that, and all those things. But so you learn it, and then you have to kind of keep relearning it because you keep falling into that trap. At least I do. So, but yeah, that's the big thing for me. So everybody has a different style though. So it's like, hey, what works for me doesn't necessarily work for them, or they don't sleep well at night that way. And I just give me good earnings, cash flow, and I consider that stable better than a book value.
And you've done quite a bit of activist investing in the past. Can you just briefly touch upon that, like what you've learned about being an activist and, being on boards of different companies? What can you tell us about that?
The activism is really hard, really time consuming, and probably not worth it all the time. There's just so many lessons. I mean, if a CEO or a board is mistreating their shareholders, they're probably mistreating their employees, they're probably mistreating their customers. So what seems like an easy fix is usually much more broken than you think, is one lesson. It's hard to do inexpensively. You got to put in a lot of time to do it. I ran a proxy fight for Solitron to get on the board, and they had a staggered board, 2015. And we probably did it for between $100,000 and $150,000, which is a lot of money, but is on so low because most people spend $300,000 to $500,000 to do it. But I had to do a lot of work writing the proxy statements and all that. So you either have to know what you're doing or be willing to work through that to save the money. Then the board side, you do learn a lot. I mean, you certainly get to dig underneath, really see the what's going on in the business. What are the cost drivers? What are what's the operating leverage? You certainly learn a lot about how boards functions, how the company functions, what better questions to ask management, what things to even look at in the financials. There's just a lot of things.
What would you say are some of your strengths that you have within investing, and what makes you unique?
Yeah, I don't know about unique. That's for sure. I know certain things you can't control. I mean, Buffett talks about intelligence and temperament, and you can't, you really can't, and honesty. You can control your honesty, obviously, but you really can't control, the level of intelligence you have or your temperament. For me, I've joked with people throughout my life is my highs and my lows are not very far apart. They can't really tell if I'm excited or I'm angry unless it's a really unusual event. So that serves me well, because I mean, if I was emotional, there's times that's really hard. You get caught up in the euphoria, or you get down in the depression of underperforming or bad returns, or 08, 09, or different time periods where it's just stinks. And you can't have that keep you from, still working at it and still looking for things. And yet I also would say is important is an underlying optimism. There's a lot of value guys that I see they're naturally skeptical, which is good. But if you always think the economy is going to turn for the worse, you're not going to really do very well. And I kind of learned not the hard way. I learned the easy way. I saw it in my own dad as he would approach investing, and he wasn't, I love my dad, but he wasn't a very good investor. And he kind of always thought a recession was around the corner and another depression. And he acted that way and functioned that way. And it was like, it's not, we're going to have them and we're going to go through them. And, and the way the Fed is, they just pump money in anyways. It seems like depressions are almost, hard to get in, stay in. So stay optimistic, stay invested. The gains you'll get in the 5 or 10 year interim before that happens, so you have a drawdown of 20%, 25%. You're still so far ahead because you've multiplied your money, so be optimistic.
Are there any big investing ideas that you've been thinking about right now, whether it be something that you read in a book or an article, or you just have on your mind?
I don't really think thematically, I pretty much look at individual companies, which I'm not planning on talking about individual companies or anything I'm working on right now. And there are things, but I don't really look at it, it's not macro down to the micro for me. It's micro up. I actually wish I was a little better at seeing certain trends or even thinking that way. That would be a weakness, is I don't, I've talked to people that, saw what was going to happen in the helium market because the government used to be the main seller of it, and eventually they would stop and it would change, or just different things that go on in different industries, and thinking through that. And maybe I could, I don't think that way naturally. I don't have the contacts to think that way. And maybe because I don't ever even think about studying the industry as a whole. I look at just the little company that I'm looking at, right? And if I'm looking at a little oil and gas company, I'm not really thinking about, international markets. I'm thinking about where's their oil field, what's their reserves, and what's their cash flow, and I'm done. I probably keep it so simple that it prevents me from doing that.
And Tim, you're a new MicroCap Club member. What led you to coming into the community, and what are some of the things that you look forward to getting from the group?
Well, I'm hoping somebody profiles some really great ideas that I can piggyback on. So I think it's fair to say you look to contribute and you look to get back. So you're trying to contribute good ideas that others can refine and maybe invest in as well. And then you're looking to find some things that you can invest in. And I think building relationships has been a big part of success. So, I want to build more relationships, go to some of the events and get to know some people, because I think that's always profitable and enjoyable.
Right. Thank you very much, Tim, for taking the time to chat with us today. Are there any places other than MicroCap Club? I'll share your handle for the MicroCap Club below, but are there any other places online, Twitter, or your websites that people can reach you at?
I can be reached on Twitter. Easy to find if you search for Tim Eriksen or Tim_Eriksen. And they can contact me through there, then contact me on websites for Eriksen Capital Management that has my fund letters and different things, but that has phone number, email. Generally more than happy to talk to people. People helped me along the way. I can't do it 24/7. So I don't want to be bombarded, but the occasional person, if I can help them, I'm more than happy to, because it's I was a recipient of that.
Great. Thanks again, Tim. You have a good one.
All right, you too. Thanks, Sean.